This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. Going to give you a stock market update as of Thursday's close for Friday morning. So let's go ahead and get into this. A lot happened here, especially to finish off the week. I want to get into some details about specific pattern based on MACD that took place in the S&P today. Or this week, I should say. So let's go ahead and get going on the market conditions. And if we start from the bottom and look at the sentiment, there was a huge jump in the bulls and there was a drop in the bears. And we actually went from like 9% positive, more bulls than bears, to up to 21% in 1 week. It was a big upward jump. Obviously, that took place before the market dropped. So that I think is probably going to be reversed again back down, I would think, based on the price action that we've seen and the levels that are being taken out. So what we're gonna want to look for in this these two bottom indicators, because this is now working its way closer to oversold. We want to see this maybe even turn negative, see a little bit of a drop a switch in the bulls and an increase in the bears, and get this down to low single digits, maybe even possibly negative or break even or something like that. And we'd get both of these into a bullish position. All right. So that's actually where I'd be leaning right now and what I'm looking for if we're going to continue to the downside. In terms of the volatility, so we finally got some movement in this daily average true range. You see how this is starting to pop a little bit. Now, it hasn't crossed the moving average, but if we have any more days like what we saw on Thursday, this is going to cross the moving average, and this is immediately going to go to neutral on the daily. If it goes like that and holds there long enough to get this line to cup around, then it'll turn to negative on the daily chart. So that's the one thing that I'm kind of on the lookout for, is some sign of like a reversal pattern on the daily chart that I think would signify a much deeper pullback for the market. In terms of confirmation, I'm not going to wait for that. If I get signals on the price chart confirmed by momentum, then I would take those trades. But I'm going to be watching this, because you really should get a move in the average true range. Now, I think this is going to lag too much. And what it's also telling me is that if we're going down, we're probably not going down on the first leg. I mean, if we're going to get really hit hard, I think it might take a little bit of time. We need some volatility. And volatility is basically distribution, right? I mean, if we're going to go through a decline, typically you go through a period of distribution, and that's when the volatility goes up. So that's part of the reason why I like using that ATR. So let's go ahead and get into the S&P, and I am using the spider for this, but let's make sure we got all our room here. So as I've been talking about for quite some time, several weeks now, we rallied our way up to the 18-month line and have struggled with it. It had a poor close to the month, and we're still, so the 18-month is still holding. You see how it failed here, and now it's declining, and it failed at it again. So we have to respect that line. So we got to be watching that. Now, up until really today, the last few days, the 18-week line, this rising line here, has been holding, but it's starting to give way. And we don't have, as I've been saying again for several weeks, we just don't have enough strength here to expect any kind of a big move to develop. It didn't have the momentum to suggest a big move to the upside, but it had the potential to maybe carry a little bit higher. And if we would have saw better green DI kick in, then you'd have to really respect it. But now I think, based on what's taken place, now the week is not over yet. And anyone who's looked at my back test of what I've done on the 2 time frame pattern, monthly and weekly, you need a close below the 40 week to really have a full-fledged signal. But I mean, you've broken the downtrend line. We had a little bit of overrun in the weekly MACD, but we still don't have any strength on this time frame. And even worse, the daily chart, even besides the move that we made from 376 up to 418, 419, we couldn't really garner a lot of strength from green DI on the daily chart. ADX could really only muster a move up to about 25. Now, I did mention the two time frame pattern. I do want to get into this a little bit because I talk about this pinch play pattern, okay? And there's a couple things I really like about this, and one thing I didn't like about it. So let's start with what I really liked about this pattern. So we have the higher low, higher low. You can definitely see the pinch when you look at the histogram. You see how this is pinching into the signal line, and this was well below the zero line. It wasn't happening at or above this line, like right near the line. This line was coming down and crossing below as this rallied up towards the zero line. I like that signal better. Okay, now we didn't really have red DI confirming the down move or anything like that. But as I've said a lot, when you're trading, you can take these type of MACD signals without confirmation from green DI or red DI or anything like that. You don't need to have the ADX confirming if you're trading. If you're looking to get in this for a move, like the start of a big trending move, then I definitely prefer to have the ADX in conjunction. But you can take MACD as a trading play all by itself without any help from ADX. Okay, so we have this daily chart that rallied up. It overran the 18 a little bit, but again, based on what the MACD was doing, not a bad little signal. Now, here's the way I look at it. Because it had the overrun, I'm probably a little hesitant about shorting this and as it crossed below this low, because it was still basically at or above the 18 on this time frame. Do you see what I mean? So if that's the case, I'm always going to go down to the next lower time frame before I trigger myself in. All right, I like the two time frame pinch for this pattern. I'm looking for that to develop. So we get this move to the downside. That's this drop here, and then look what happens. We get this little miniature rally bounce that ends up being a pinch play. You see that? And these are well. So let's zero in on this for a second. This is well below both lines below. We have no question about the pinch. We had a gap that developed. There was a gap in there, but we had a declining hourly line. We have a declining daily line. We have a two time frame pinch play that definitely qualifies for that. Now, here's what I think was actually a better way to do this. You could have done that, this morning, or I believe that was this morning. Yes, taking that trade as it opened. But look at what happened on the 10-minute chart. Because of the way this developed, we had, let me see if I can get this so you can see. Okay, so I want to show you on this here. So if you look at where this developed here, there's a pinch right here that happened. You see where that circle showed up? That happened right in this area right there. You see how that's a quality signal? This pinch play is a quality signal because you can put the stop there as this is taking this out. Now, here's the problem with taking the hourly trade, because at this point, we're looking at the daily rising up. You kind of have to assume we've got support here. So if I'm doing a two time frame pinch, I kind of have to use, let me go back to I kind of have to use this prior low here as my target. And when I do that, it's hard to get as good of a entry point or risk reward point, I think. So if you go down to the 10-minute, it makes the risk reward dramatically better. And we have a pretty impressive little pinch. And if we take it here, we've got plenty of room down to this low, and the risk reward skyrockets in your favor. All right, so this is the way I would view this as I'm going through and making decisions on this. I'm looking at this and I'm trying to figure out, if I get a signal, if I get a signal here, and then I get a signal like this, which is really tight, it hasn't made a big move to the downside already before it pinches, then I want to take this pinch play. I hope I'm explaining this well enough, because when you think about it, what we're trying to do is get momentum in our favor, momentum in our favor, and then momentum in our favor, and then increase the risk reward dramatically and try and get a piece of the trend. We don't need to make a kill in this type of pattern. We just get a leg, and a leg might be just a move back to this prior low, here, which it actually ended up taking out by the end of the day. But you don't know that when you're putting the trade on. So you want to improve your risk reward in this scenario. It would have been tough to get in and get out, trying to make it move down to these lows like this, getting in here with a stop up above. So this is the way I think when I'm going through these trades. If I've got a pinch play, a 2 time frame pinch play, I want to take it, but I want to make sure the risk reward has at least 2 to 1 in my favor. If it's not 2 to 1, then I might go down to the next lower time frame and wait for the first pinch. As long as that pinch happens within the first couple bars and I haven't made a huge move to the downside, then I can take that next pinch. So this is a 3 time frame pinch play, and it turned into a huge win for the day. You could have been out by the end of the day, and it was just a monster win. You might have played for a specific target or just down towards these lows of 393. But if you think about it, if I'm in at 398 and a half with a stop at 399 and a half, let's say, I risk a buck, and this low is 393. You're talking about what? A six point move, risking 1 unit. So risking 1 point to make 6. Those are the type of odds I really want in my favor, in something where we've got all these time frames kind of working together. Now, what I say here is, what I don't like about this trade is that we didn't have confirmation on this time frame yet. Do you see how we were sitting right when this was triggering? It was right in the area just below, just above the 18-week. It hadn't actually broken that again. But I think you have to take into account all the information that we've got in terms of momentum, especially when you look at the daily chart. And if you look at the daily chart and you say, you know what, odds are pretty good we're going to come back down and test this low. Can I make it work as I move down these time frames? And so that's how I would go about doing that. And if I have to use a third time frame, I will do it. I outline this in the book. It's one of the chapters in my book, the 2 time frame pinch play. And at the end, I show you how you can go down to a third time frame. You just got to make sure you can't wait. You can't wait for, if this time frame triggers after you've made a big move to the downside, then I don't like the trade as much. All right. So anyway, that's the update for the week. I do want to point out one other thing. This is going on a little bit longer. So let's just look at this. If we're going to move to the downside, first target is 3,800. This has been a key level. I think, though, the higher probability is we're going to come down into this zone, which is around 3,700, maybe a little bit below, and test these bottoms here, as opposed to just holding our ground right here. So that's kind of what I'm looking for right now. If this is going to survive and we're not going to go down right now, then we need to have a pretty good day tomorrow, I think. I think we almost have to reverse what happened today tomorrow. Now, we have another inflation number coming out in the morning. So, it's entirely possible that we're gonna turn this thing around with good news. Okay, so here's what I've been saying to guys, because I've been getting some emails from guys saying they're struggling a little bit with the swing trades. And this is not a great environment for swing trading, because every day there's some new event, new economic release that could have an impact on the direction of the market. And you can see up a couple days, down a couple days, and it's not like it's violent moves. Even though the ATR hasn't really exploded yet, you don't have a really good environment for swing trading at this point. So we've got an 18-week going up, an 18-day going down. It's not the perfect environment for playing swings. This was a bounce off. This was a pinch play back here, and we rallied up and we got a pullback to a rising 18. So we had both time frames in conjunction together. This to me is a little bit better swing trading environment. But then once this broke again, now we're going counter to these two time frames are going counter to one another. So you have to be really, really nimble. So I know you're trading off of a daily and an hourly, but you got to take into account this bigger time frame. And if you're fighting the bigger time frame, you're going to have a harder time. You're going to have more stop outs. You're going to have it's just, what I try and tell the subscribers to my research is in a time like this, when we don't have any real strong conviction from the buyers or the sellers, you play lighter, you play smaller positions, you get a lot more selective. I think that's the best way to handle this. Now, we might have an opportunity here to the downside. If we get a little bit more follow through on the next rally, we could have a pretty good setup as a potential move down into these lows. So that's probably what we want to be on the lookout for. Anyway, that's the update for the week. Go ahead and post any questions or comments. Thanks.